This video is for solo founders or self-employed individuals looking to maximize retirement. Basically, there's this retirement account a lot of people don't know about called a solo 401k. Specifically, the one that I like is a Roth Solo 401k. And essentially, what's so good about this account is that because you're a solo founder, you are both the employee and the employer of this 401k. So for 2026, make sure it's the right year because this number changes based off of inflation based on the year. You can contribute up to $24,500. And then for the employer portion, you can contribute up to 20% of your net profit from the business that you own and operate. So let's say you made $100,000 in 2026. So you can contribute this amount as long as that amount exceeds your net profit, which it does. And then you can contribute 20% of your net profit as well. So you would be able to contribute that amount for the employee as well as 20% of your net profit for a total of $44,500. So you could contribute up to $44,500 to a Roth Solo 401k as a solo founder with just $100,000 of net income, which is crazy because a Roth Solo 401k, since it's a Roth, then you can actually pay taxes up front. So when you actually contribute the amount is when you pay taxes, because later on when you retire and pull out the money, you've already paid taxes up front because it's a Roth. So you would be able to pull the money out tax free. So given that you invest well in that account, then you could make so much money from this account because that a year, not to mention, let's say you have $200,000 next year, then you could do 20% of that, which would be $40,000 plus, given it doesn't change, $24,500. So next year you would be able to contribute $64,500 straight to a Roth Solo 401k, and that amount would be tax-free when you pull it out at retirement because you've already paid taxes on that amount because it's a Roth. So that's something crazy that many solo founders don't know about.